Welcome back to the show, everyone. Today, we're unpacking the latest financial results from Container Corporation of India Limited, or CONCOR. They're a big player in the logistics space, a Navratna central public sector enterprise specializing in multimodal logistics. This should be a comprehensive look.
Absolutely. CONCOR is a key entity in India's transport and logistics network, handling a massive volume of container traffic. We've got their audited financial results for the fourth quarter and the full financial year ended March 31st, 2025. The board approved these on May 22nd, 2025. We'll be looking at both standalone and consolidated figures today.
Great. So let's dive straight into the key financials. How did CONCOR perform in terms of revenue for Q4 and the full year? Let's start with the standalone numbers.
Alright, on a standalone basis for Q4 FY25, revenue from operations was 2,281.37 crore rupees. Year over year, this is down from 2,317.63 crore rupees in Q4 FY24, a decrease of about 1.56%. Quarter over quarter, it's up from 2,201.90 crore rupees in Q3 FY25, an increase of about 3.6%. For the full financial year FY25, standalone revenue was 8,863.37 crore rupees, up from 8,632.49 crore rupees in FY24.
Okay, a bit of a mixed bag for standalone Q4 revenue with a slight YoY dip but a QoQ rise. What about the consolidated picture for revenue?
On the consolidated side, Q4 FY25 revenue from operations was 2,287.83 crore rupees. Year over year, this is down from 2,325.13 crore rupees in Q4 FY24, a decrease of about 1.6%. Quarter over quarter, it's up from 2,208.31 crore rupees in Q3 FY25. That's an increase of about 3.6%. For the full financial year FY25, consolidated revenue stood at 8,887.02 crore rupees, up from 8,653.41 crore rupees in FY24.
Similar trend on the consolidated side for Q4 revenue. Now, let's look at profitability. What about EBITDA, or earnings before interest, taxes, depreciation and amortization?
Okay, for EBITDA, we'll calculate it using profit before tax, adding back finance costs and depreciation and amortization. The PBT figures here are after exceptional items. For standalone Q4 FY25, PBT after exceptional items was 404.85 crore rupees. Finance costs was 16.62 crore rupees. Depreciation was 155.18 crore rupees. So, standalone Q4 FY25 EBITDA comes to roughly 576.65 crore rupees. Year over year, Q4 FY24 standalone PBT after EI was 396.28 crore rupees, finance costs were 19.00 crore rupees, and depreciation was 160.26 crore rupees, giving an EBITDA of about 575.54 crore rupees. So, EBITDA is flat year over year. Quarter over quarter, Q3 FY25 standalone PBT after EI was 459.60 crore rupees, finance costs was 17.13 crore rupees, and depreciation was 81.02 crore rupees, for an EBITDA of about 557.75 crore rupees. So, Q4 EBITDA is up QoQ.
And for consolidated EBITDA?
For consolidated Q4 FY25, PBT after exceptional items was 391.59 crore rupees. Finance costs were 17.47 crore rupees. Depreciation was 160.02 crore rupees. So, consolidated Q4 FY25 EBITDA is about 569.08 crore rupees. Year over year, Q4 FY24 consolidated PBT after EI was 406.40 crore rupees. Finance costs were 20.03 crore rupees and depreciation was 164.51 crore rupees, giving an EBITDA of about 590.94 crore rupees. So, consolidated EBITDA is down year over year. Quarter over quarter, Q3 FY25 consolidated PBT after EI was 457.21 crore rupees, finance costs were 17.97 crore rupees, and depreciation was 85.49 crore rupees, for an EBITDA of about 560.67 crore rupees. So, Q4 consolidated EBITDA is slightly up QoQ.
Moving down to profit before tax or PBT as reported.
Standalone PBT for Q4 FY25 after exceptional items was 404.85 crore rupees. Year over year, this is up from 396.28 crore rupees in Q4 FY24. Quarter over quarter, it's down from 459.60 crore rupees in Q3 FY25. For the full year FY25, standalone PBT after AI was 1,698.06 crore rupees, up from 1,634.48 crore rupees in FY24.
And consolidated PBT.
Consolidated PBT for Q4 FY25 after exceptional items was 391.59 crore rupees. Year over year, this is down from 406.40 crore rupees in Q4 FY24. Quarter over quarter, it's also down from 457.21 crore rupees in Q3 FY25. For the full year FY25, consolidated PBT after EI was 1,688.66 crore rupees, up from 1,638.49 crore rupees in FY24.
Okay, and the bottom line, profit after tax or PAT?
Standalone PAT for Q4 FY25 was 302.14 crore rupees. Year over year, this is up from 294.54 crore rupees in Q4 FY24. Quarter over quarter, it's down from 343.44 crore rupees in Q3 FY25. For the full year FY25, standalone PAT was 1,271.98 crore rupees, up from 1,230.79 crore rupees in FY24.
Consolidated PAT.
Consolidated PAT for Q4 FY25 was 287.69 crore rupees, attributable to owners. Year over year, this is down from 301.25 crore in Q4 FY24. Quarter over quarter, it's down from 340.52 crore rupees in Q3 FY25. Full year FY25 PAT is 1,291.84 crore rupees, up from 1,248.45 crore rupees in FY24.
And the earnings per share EPS.
Standalone basic EPS for Q4 FY25 was 4.96 rupees, year over year up from 4.83 rupees in Q4 FY24. Quarter over quarter down from 5.64 rupees in Q3 FY25. For the full year FY25, standalone EPS was 20.88 rupees, up from 20.20 rupees in FY24.
Consolidated EPS.
Consolidated basic EPS for Q4 FY25 was 4.91 rupees, year over year down from 4.99 rupees in Q4 FY24. Quarter over quarter down from 6.03 rupees in Q3 FY25. For the full year FY25, consolidated EPS was 21.20 rupees, up from 20.49 rupees in FY24.
Was there any significant other income we should note?
Yes, other income was quite notable. For standalone Q4 FY25, it was 143.19 crore rupees, up significantly year over year from 93.67 crore rupees and QoQ from 99.49 crore rupees. For the full year, it was 465.16 crore rupees, up from 378.27 crore rupees. For consolidated Q4 FY25, it was 128.51 crore rupees, up year over year from 92.74 crore rupees and QoQ from 95.68 crore rupees. For the full year, it was 446.91 crore rupees, up from 370.34 crore rupees. This certainly helped the PBT figures.
Indeed. Now looking at profitability margins, EBITDA margins or net profit margins.
Let's look at net profit margins, PAT, upon revenue from operations. For standalone Q4 FY25, NPM was about 13.24%, 302.14 upon 2,281.37. This is up from 12.71% in Q4 FY24, but down from 15.56% in Q3 FY25. For consolidated Q4 FY25, NPM was about 13.06%, 298 upon 2,287.83. This is down from 13.08% in Q4 FY24 and also down from 16.63% in Q3 FY25. The Q3 margins were quite high. The full-year FY25 standalone NPM is 14.35% and consolidated NPM is 14.53%.
Any significant exceptional items reported?
Yes, there was an exceptional item. For Q4 FY25, it was 7.14 crore rupees for both standalone and consolidated. For the full year FY25, it was 33.32 crore rupees. Note 4 explains this is an amount paid for settlement of disputed claims against the company, including under the Vivad Se Vishwas 2 scheme.
Got it. Let's touch upon the balance sheet. Any key highlights there?
Looking at the consolidated balance sheet as of March 31st, 2025, total equity attributable to owners stood at 12,380.19 crore rupees, up from 11,826.52 crore rupees a year ago. Total assets increased to 14,475.87 crore rupees from 14,041.35 crore rupees. Key asset movements, property, plant and equipment net increased to 6,574.47 crore rupees from 6,012.16 crore rupees. On the liability side, non-current borrowings are minimal at 24.25 crore rupees. Current borrowings are also nil. This indicates a very strong balance sheet with low debt.
What about cash flows and any dividends or bonus shares?
From the consolidated cash flow statement for FY25, net cash from operating activities was strong at 1,711.54 crore rupees, up from 1,386.80 crore rupees in FY24.
Claps.
Net cash used in investing activities was 628.63 crore rupees. Net cash used in financing activities was 914.06 crore rupees, mainly due to dividend payments. Regarding shareholder returns, the board has declared a final dividend of 2 rupees per share, 40% for FY24-25. This is in addition to 3 interim dividends already paid during the year. First, at 40%, 2 rupees, second at 65%, 3.25 rupees, and third at 85%, 4.25 rupees. That's a total of 11.50 rupees per share in interim dividends already paid. And a big one, the board has also approved a bonus issue of equity shares in the ratio of 1 new share for every 4 existing shares held.
Whistles. That's significant news for shareholders. Now, let's break down the segment performance. CONCOR primarily has EXIM and domestic segments, right?
That's right. We have data for EXIM and domestic segments from page 5 for both standalone and consolidated. Let's focus on consolidated for segment discussion. For Q4 FY25 consolidated, EXIM segment revenue was 1,491.01 crore rupees, up from 1,442.10 crore rupees year-on-year, and up from 1,389.36 crore rupees QoQ. Domestic segment revenue was 796.82 crore rupees, down from 883.03 crore rupees year-on-year, but up from 818.95 crore rupees QoQ. In terms of segment results, profit before tax and interest, EXIM Q4 FY25 profit was 298.45 crore rupees, down from 326.15 crore rupees year-on-year, but up from PBT for Q3 EXIM is not directly in this summary, but for the full year results are strong. Domestic Q4 FY25 profit was 41.82 crore rupees, down significantly from 83.32 crore rupees year-on-year. For the full year FY25 consolidated, EXIM revenue was 5,734.02 crore rupees, up from 5,554.33 crore rupees in FY24. EXIM profit, PBT and interest was 1,315.32 crore rupees, up from 1,248.67 crore rupees. Domestic revenue was 3,153.00 crore rupees, up from 3,099.08 crore rupees. Domestic profit was 251.30 crore rupees, down from 273.90 crore rupees. Capital employed in EXIM as of March 25 was 2,632.77 crore rupees, and in domestic, it was 3,340.27 crore rupees. The EXIM segment is clearly the profit driver, though domestic showed revenue growth for the full year. The Q4 dip in domestic profit is notable.
Interesting dynamics there. What about other significant notes or events from the report? You mentioned the land license fee and wagon life earlier.
Yes, those are crucial. Note 3 on land license fee LLF. Railways issued a master circular in October 2022. CONCOR has booked an LLF amount of 370.09 crore rupees for FY25, net of past provisions of 65.54 crores. This is based on the company's own assessment and is not final. Importantly, CONCOR has not recognized right-of-use assets and lease liability for lands licensed by Indian Railways due to this uncertainty. This is a major ongoing point. Note 5 on depreciation. The useful life of wagons was increased from 15 to 30 years effective Q3 FY25. This change reduced depreciation by 79.25 crore rupees in Q3 FY25. For the full year FY25, the depreciation on wagons was 49.61 crore rupees, which is a reduction of 92.11 crore rupees compared to what it would have been. This positively impacted profits. The company has also appointed new internal auditors as detailed in Annexure C for different areas effective FY25-26.
Now, a very critical part, the auditor's report. MS Hem Sandeep & Co. audited these financials. What did they have to say? Let's start with standalone.
For the standalone financial results, the auditors issued an unmodified opinion. That's good. However, they included several emphasis of matter paragraphs. First, regarding the land license fee payable to Indian Railways, citing the company's assessment and the non-assessment of ROU assets due to uncertainty of lease terms, as we just discussed. Second, they pointed out trade receivables of 24.56 crore rupees outstanding for more than 3 years. While a provision of 4.84 crore rupees has been made, no provision was made for the remaining 19.72 crore rupees, which includes 6.52 crore rupees from parties under legal proceedings. The outcome here is uncertain. Third, balances of sundry debtors, creditors, and advances, including those with railways, are subject to confirmation and reconciliation, and some are outstanding for over 3 years. The effect isn't ascertainable. They also included an other regulatory matter. The position of independent director remained vacant from November 9, 2024 to March 31, 2025, which is not in compliance with the Companies Act and SEBI regulations.
An unmodified opinion is positive, but those emphasis of matter points are definitely worth noting. What about the Consolidated Auditor's report?
For the consolidated financial results, the auditors also issued an unmodified opinion. They reiterated the same emphasis of matter paragraphs for CONCOR, the holding company, regarding LLF, old trade receivables, and balance confirmations. Then, they added emphasis of matter for 2 subsidiaries. For Fresh and Healthy Enterprises Limited, uncertainty regarding the outcome of a lawsuit filed against various sundry debtors. Amounts recoverable from certain customers, like MS Elements Exports, outstanding for more than a year with no recovery suit filed by the company. A dispute with HSIDC over revised monthly lease rental, which could result in a liability of about 11.36 crore rupees if the revised rate is enforced. For CONCOR Air Limited, they highlighted a material uncertainty related to going concern. The company's operations were discontinued in FY22-23 due to termination of concession with MyAL, and there were no business operations in FY23-24 or FY24-25. Management is trying to enter an agreement with the holding company to manage air freight business. This casts significant doubt on its ability to continue as a going concern, though the auditor's conclusion is not modified for this.
The consolidated report also has an other matter paragraph. They did not audit the financials of 4 subsidiaries. Total assets 431.43 crore rupees, total revenues 82.12 crore rupees for FY25. They relied on reports from other auditors for these. They also relied on unaudited financials for 9 jointly controlled entities where the group's share of net profit was 24.02 crore rupees for FY25, stating these are not material to the group. Specifically, for SIDCUL CONCOR Infra Company Limited, a subsidiary whose financials were likely audited by another auditor or are part of the unaudited set they are relying on management for, the auditors draw attention to notes in that company's financials regarding old outstanding payables for capital purchase and other current payables, old expenses payable to UPCL for electricity from 2015 to 2018 where billing hasn't been received since March 2015, non-availability of balance confirmations for receivables and payables, and slow-moving inventory. Finally, the other regulatory matter regarding the independent director vacancy at CONCOR is repeated for the consolidated report. The company has also provided declarations stating the auditors issued unmodified opinions on both standalone and consolidated audited financial statements, pages 22 and 23.
Wow, that's a lot to digest from the auditors. Unmodified opinion is the headline, but those emphasis of matter, especially the going concern for CONCOR Air and the SIDC infra issues, plus the reliance on other auditors, are crucial context. So, considering all this, what's the outlook and what are the key risks for CONCOR?
The outlook for CONCOR seems cautiously optimistic, driven by the performance of its EXIM segment and overall profitability improvements for the full year. The bonus issue and consistent dividends are positive for shareholders. However, there are significant risks and monitoring points. The land license fee finalization remains a major uncertainty and could have a substantial financial impact. The emphasis of matter points from the auditors, especially the recoverability of old receivables and the going concern status of CONCOR Air, need careful watching. Performance of the domestic segment showed weakness in Q4 profitability. General economic conditions, competition in the logistics sector, and execution of new projects are ongoing operational risks. As always, we advise investors to check with certified experts before taking any investment decisions.
Excellent summary. So, to wrap it up, CONCOR has shown improved annual profitability and is rewarding shareholders. The EXIM segment is strong. However, the LLF uncertainty and several points raised by the auditors in their emphasis of matter sections, particularly concerning subsidiaries, require close attention from investors.
Precisely. The headline numbers look decent, especially the full-year growth and the bonus issue. But the notes to accounts and the auditor's report reveal several underlying complexities and potential future impacts that shouldn't be overlooked. The balance sheet remains strong with low debt, which is a definite plus.
Thanks so much for that detailed breakdown. That's all the time we have for today. Join us next time for more financial insights.
Thanks for having me. And to our listeners, if you found this helpful, please like, share, and subscribe for more updates.